a lot of people are looking at, we saw a ton of growth, incredible amount of demand, record demand. Even though we saw a record amount of deliveries in 2021, we saw demand in absorption blow those records out of the water. I mean, like 500,000 units were absorbed in 2021, even though we had, I think, like 400,000 units delivered, something like that.
Well,
usually it's like 300.
It was in the 300s, but it was
usually it's
insane.
in the 300s, but we had 500,000 units of absorption.
Yeah. Okay.
And so we're looking at 2022, what that pipeline is looking like. A lot of new units are coming online or going to be coming online over the next, 18, 24 months. RealPage had a pretty good interesting piece. 2021 will be a record year for construction. Matt, start just taking us in. What do you think?
So yeah, we've talked about the materials and labor shortages here. We've also talked about the compelling reasons why multifamily developers continue to build apartments. There's dramatic rent growth, low supply, and high demand from both renters and investors, which has kind of created an environment where building apartments makes financial sense. I've said a version of this, like I said, a few times before, but since it's a brand new year, I'm going to say it again. In a time when supply chain issues, material shortages, labor shortages have made the headlines week after week, an industry that uses vast amount of all of these, it really depends on it, and an industry that can't exactly work from home, that industry continues to operate and break records this year.
What does? The construction industry?
The construction industry, yes.
I mean, they're sort of operating.
Well,
I mean, like things are being built, but
the fact that these records are being broken, and that's another thing. It's like you see construction continuing. It's like normalcy, but I think that it is a small miracle.
But are we talking about the pipeline or deliveries? Because it's a big difference to say I'm going to build it.
Well, the numbers here in this report say that 426,000 units are expected to be delivered, which is record breaking. And I do think that it's a sign of how strong the housing market is, that despite all of these problems, they still continue to find a way to make it work. It's not like, they could make the decision not to build. Sometimes they simply don't have the materials, but a lot of times the materials are just a whole lot more expensive than they were.
Yeah, I think they're getting the materials, but they're either more expensive or there's just delays. And so that's where it's like you're getting it done. But you can get it built eventually, but is it actually going to be in 2022, or is it how much of those expected deliveries are actually going to get stretched out into 2023? Yeah, especially because with the whole Omicron variant, things aren't it's not exactly speeding things up. Things are for worse, shutting down, and slowing down. But things will finally pick back up when people really enter the workforce. Because that's the hard part is, there's not the labor out there.
Yeah. That's what I was thinking is, especially with the Omicron and there are, the story that seems to be emerging is that it's milder, but still that's another week. Maybe they're gone for a week. That's another delay.
Yeah,
and especially
milder, but if everybody's out,
especially if it's a key position in that project, and then everyone's waiting for that one person to get done. But my whole point for this whole thing was that that the demand is such that this resource intensive industry of development and construction, that same industry is continued to build and is expected to build and break records. It is a small miracle that they're able to do it, but it is also this sign of the enormous demand that we're seeing.
Oh, well, there's blood in the water. If you see price appreciation, 20%, 40% for when we're talking about multifamily assets. So your labor's up, 20%, but if your value's up 40%, you can justify paying more. You can justify paying more for supplies. The difficult part is it's just less certain. Yeah. We don't exactly know how much more. We know it's going to be more, and so we're speculating on our inputs, but we're also speculating on the valuation at the end of the day. And I think a lot of people are getting things mostly right, but it leads to opportunity for speculation.
Well, and that's what I thought was interesting, because this says that this 426,000 is nearly double the long-term average.
Oh yeah.
And then they're also talking about how, breaks the record from 40 years ago. So we haven't built this much since 40 years. And I can't help but think about that long-term average And like, why is there this inflection point that you see in that graph of the past several years when our housing situation is the product really of a confluence of long-term changes and long-term generational trends that did not emerge overnight. Yeah. So I was kind of thinking, like, why in the past kind of 3 years have we gone up and up and up when it comes to, housing demand and supply? And looking at this visualization from the Census Bureau kind of highlights one potential reason. You look at and so this measures the building permits in terms of total units, and then you can also look at the multifamily units as well. So that's total residential units. And then if you go down on that, if you click there, you can look at multifamily units as well as the valuations for each of these. And even just looking at the for all housing units, you see, however you slice this graph, you see a tangle kind of, a little bit of variation. And then it's like someone went and pinched that graph.
The 2008.
Yeah, the housing crisis.
Crash, global financial.
And it is interesting. You can see kind of a rough correlation between the valuation and the actual permits that are issued that year. But I think that the trend lines coming down there at the 2009 housing crisis, this is just another illustration of a potential reason, really. So little permits and construction during that time period and really kind of crawling out of it. And this buildup of construction in the last 3 years could, and this is a little bit of a speculation on my part, could be this delayed but growing reaction of a market catching up to the disturbance in the housing market supply from 10 years ago.
What's interesting to me, I don't even see where is Florida.
Florida is I'm
colorblind, so I don't
Florida
know.
Is that top spike that you see? Yeah, there you go.
Okay, so I was confusing Florida and California because I was going to say, wait, Texas, that makes sense, but where is Florida? So it's getting back up there. You see California really declining, but I think your point, Matt, makes a lot of sense. I mean, look at this huge gap.
Yeah,
and and the point that RealPage makes, and a point that has been made by other sources, is that we have a lot of supply coming online.
Yeah.
But most of that supply is in just a handful of markets.
Yeah, exactly.
It's in Texas. It's in Florida. It's in Arizona.
Mm-hmm.
It's in a lot of these Sunbelt markets. But then the majority of states are down here because, you've got major capital sources in New York, in California on the East Coast. And everyone's going after the same handful of markets.
Yeah, and that's what's so interesting. You look at that chart. Those same ones that are dominating in terms of housing supply. Those are the same ones you see it peak up so sharply, and then the next year goes down almost just as sharply.
I think it's a good point. Yeah. So this is units constructed, but actually, if you go to valuations, multifamily valuations, just to your point, Matt. You see. So this is Florida. A great example of the crash. There's a lot of growth. There was great population growth in Florida back in 2007, 2008, but you could still build too much.
Yeah.
Now, that looks scary, and look what happened.
And if you highlight on 2006, the valuations for Florida properties are roughly double the valuations for Texas property, and they had about the same amount of permits for that year for 2006. So it's just it also, you can see where the story of a market's going, but you can also see that that valuation and units are not always correlated, and it matters a lot.
You've got it's one side of the coin. You were looking at the supply side, but not the demand side. And it's the higher you climb, the harder, the further you can fall. Not always, for sure. But it's worth paying attention to in markets like Austin or Houston or Atlanta, where you look at the fundamentals and it makes sense with all the population. If everyone is getting that same message, I'm not saying that it will happen, but there's a potential to build too much.
Yeah.
And another thing that I think back to, Matt, of the report that we looked at last week from RealPage and Berkadia, that renter cohort report, breaking down, who are your renters, who actually is making up the population of these properties. the majority of them are not looking for Class A units, which is the only thing that's being built. I mean, those like affluent singles and, some of the, couples and families possibly are looking for, new Class A units, but really looking at really 30% of the market are going to be running this new construction.
Good point.
Leave 70% of 70% of the demand with no new supply coming online.
Yeah, that's a really good point. And a lot of the markets that you're looking at that are building all those are high cost of living markets.
Yeah.
And justifiably so. I mean, if it's a popular market, it's going to, but building a lot of expensive houses in a lot of expensive markets doesn't really solve an affordability crisis.
I mean, there's clearly demand for them, and those units are getting leased up, but we're definitely not making a dent. I mean, at least not initially. I mean, over time, accumulation of units, more supply, that does bring down rent. It doesn't bring down rents, it slows the growth of rents, because all of a sudden, if you've got a brand new property that comes online, it's the nicest thing in town, the only thing that's come online recently, you can kind of charge whatever you want. But if you've got 3 of those, you all have to really start competing with each other, and you can't. There's no other competition. You can say, okay, let's get another $50 a month, a year, another $200, $100, $200. There's no other competition. But if you got 2 or 3 more, you're gonna get some pushback.
Yeah,